Good morning, everyone. Let's begin. Let me just put my spectacles on and do the full screen. Yeah, okay. Welcome to the Euro Trade. We are going to be looking at what silver is doing this morning. I'm your host, Marcus Stalker D. If we're meeting for the first time, I've been trading for about 19 years at this point, and I specialize in commodities, so precious metals, energies, and the likes. Not many commodities. If we ever get DAX here, I will be focusing on that as well. But for now, let's have a look at those metals and energies. So first up is silver, because I have been focusing on silver quite a bit. At the moment, we're kind of wicking above the former Asia high that we created around 5 a.m. my time. Whoops, no, this is not a micro. So I want to see where we are in regards to some gamma levels, expected moves, and all of that good stuff. We are currently sitting above COMEX value high. COMEX value from the TPOs and from the volume value, they're very, very similar, right? So like a couple of ticks out here and there, but generally is at the same spot. That's always a good thing. Mean reversion towards that level is definitely a possibility, especially because the gamma wall today was overshot by Asia, and it was at 52. This is, of course, a new contract, so we just rolled. Well, we rolled yesterday into March. However, you will notice that gold actually rolled into February, so that's a bit of a disparity there, and that's usually because of the delivery requirements of the producers of the commodity, right? Or users as well, producers and users. Yeah, and I think around about that time you have like Chinese New Year, and there's a whole other things. What am I doing here? Coal. There we go. To the upside, we have the implied volatility area, 1-day max. However, my average daily range actually says that we have quite a lot more space. And I would argue that Asia movement, the way it's been, just shooting straight up, you know, slightly unusual, maybe some positioning in the new contract. Having said that, whilst all of that is happening, Delta is negative, so that is a little odd. So again, could be attributed for the to the rollover, because that's the volume is still migrating from one contract to the next. But let's see what they want to do here at this Asia high. They're trying to hold above it, so that's not statistically that great. Do we have something to anchor the VWAP? I mean, maybe this one. Maybe that one. Okay, so let's touch a VWAP here. Just kind of watch it. So what am I looking for? We already had like this big exhaustion bump above the Asia high. At the moment, they retested that area. Typically, that's not really what you want to see when you're fishing for these like smash to the Asia high in reverse. It still might happen. It's just when it kind of retests the level, it means that the initial takeout of the high, followed by what should be a mean reversion, probably failed. So we're gonna see if there's any. But you know, if it goes higher, this is not the time for me to be doing breakouts. So I will be looking for the next time of day closer to sort of 10:30, 11 as we get closer to the end of the stream. But I do not want to be in a situation where, you know, we get to do a breakout and then they do the pinning of the price, which happens a lot for this time of the day. So we want to make sure you're trading with what we're actually seeing and not what we think should happen. So basically I have the mean reversion window here that if it fails, then you need to look at the next mean reversion window effectively. But right now this is not really the play that I like to see. I mean, I suppose we could do a punt. Let's wait and see if they can hold above the initial balance high. That's the other reference here. But yeah, it doesn't look like the mean reversion today after the smash. Because usually you have Asia high, London open as your two reference points. So if it smashes through Asia high, you would expect it to test London open. If that doesn't happen, then you have to consider that we are in a lower probability day where it just kind of carries on higher. But is that a setup that I want to take? Too high up for me. It's too high up. I do not like. But yeah, so what I would like to see is that we get back down to, you know, at least 52.25. Ideally 52, which is where the gamma wall is. But if I don't get that, then obviously I have to consider an outlier day where we go breaking out of Asia and then we have a continuation thesis. But right now, there's like not too, apart from price pathetically attempting to hold above Asia high, it's a little bit sketchy. Because I also want to see it get above this initial balance high, so that's the first hour of trading. The other time frame participants, the OTPs, they usually leave the footprint by holding the price above the initial balance. So if they don't want to do that, then the mean reversion is still on. But it is a sketchy mean reversion at this point. Because like about 80% of the wicks above the Asia high already failed. So this is why I'm not too keen on this yet. Thoughts on gold? Well, gold and silver are highly correlated. We can have a look at gold while I'm waiting for this to do something. Very similar. So I'll just... Even though the correlation between silver and gold is a little less today. A little less. Don't really look at dollar, because unless we have like monetary policies and speeches and stuff, I just don't think you should be focusing too much on that for your trades that are going to last for 3 seconds. But you know, if you want to hold trades for longer, then the fundamental picture might have some sort of value to it. However, for what we're doing here, unless it's an imminent release, I just don't really see. For most people, you know, I've seen how you guys trade. It's like, I'm in! And I'm like, right, where from? I'm out. Like, great draw McGraw there. So, similar picture with the value being a little bit closer when it comes to gold. Was this yesterday? Yeah. And yeah, so very similar picture. Now in the TPO profile, 4183 is the value high, so just a little closer there. Again, Asia high. Yeah, gold looks a little weaker, I suppose, because we never took out the Asia high that was created overnight. So that's a bit weaker, for sure. ADR high sitting at 42.40. Way up. Now to play devil's advocate to the downside, where do we have? Where do we have the ADR low? Down at 41.30. It's very far. Wasn't too far off there. Right. Is this Asia low? Pretty much, yeah. So very, very similar. You know, if you were to kind of put them side by side, maybe saying that, you know, gold didn't take out the Asia high, maybe we are still waiting for that, right? But I wouldn't really do anything until we touch Asia high. When it comes to the call walls, 41.75 is a call wall. If we manage to get down below 41.95 on this new February contract, then the mean reversion has a pretty decent chance of happening. But until such time, what is going on with copper? I've just realized copper is jumping. And the other two are not. So it's like, what? Look at that. Copper is like, goodbye guys. I'll see you later. And do we have like an inflation release or something today? That could be right. But yeah, it's funny how that it sometimes just unglues itself. Let's have a look at copper on the large time frames, because I think we're still looming and lurking in that same range. Yeah, so nothing much has happened on the weekly. Anything on the daily? I mean, I suppose you can call this a bit of an accumulation. Now they're pushing up, but you know, we have a congestion area right there. All of this is a very high volume node. Yeah, still doesn't look that great intraday on the large time frames, but maybe intraday we have something. So let's see. Let's find the value area from yesterday. COMEX, there we go, all the way to 9 p.m. Right, so obviously sitting above that. Asia, again, followed that pattern of both of these, but the difference is, yeah, we have a big divergence now in copper. Hold on, let me change this, because this is old now. Oh, it automatically anchors it to right. Okay, so you can see this is a correlation measure. It's dropped down dramatically. So overnight it was kind of pretty high, like almost to a factor of 1, and then they kind of start to diverge. And now the London session is starting. We had a massive drop off in the correlation, so that is unusual to say the least. But yeah, let's see how we can do that. So this was the previous day's high. Looking at the structure of copper, that's probably what they want to hunt instead of the Asia high, because structurally that's a more important area on this contract anyway. But yeah, so from the perspective of the ADR, that's coming up at 518.60, so already there. Do I have any markers here already? Not really. If we cannot break confidently above the previous day's high, again, there could be some shorts there. But if we do break, and if this is a beginning of finally that run through the big smash that we had weeks ago, then on copper, I wouldn't necessarily fight that because of where we are structurally, like on a very large time frame. So if you look at where gold and silver are on a weekly chart, we're very high up, right? So they're massively high up after all of that. Can it go higher? Yeah, of course it can, you know. But is it likely that they're gonna maybe pause a little bit? Whereas look at copper. So where are we structurally? Quite far away from the highs, right? So this one has a lot more space, and it has this nice thin volume area here to contend with as well. So to me, this is looking a better location for continued longs on those big bird's eye view time frames than either gold or silver. I mean, silver, it does look bullish, you know, it does, but which is a better trade location? Which one carries less risk? This one, right? Like, well, what's this one doing? Just going up into the distribution, potential distribution. But then you have all these wicks, all the wicks. So we'll see. Could we be long both intraday? Yeah, we could. Is that double exposure? Probably. So if you do want to trade two things of the same asset class, for whatever reason, just partial your maximum default position size in half. Same thing with NQ and ES. If you want to trade MNQ and MES, maybe you want to use 2 for MES and 1 for MNQ, because NQ is faster of the two. So yeah. All right, I'm going to change back to silver here, just to keep monitoring how things are progressing. Maybe we leave gold on this other side. On the other side. Right, so get the drawings back. Right, we're trying to tag that big volume smash VWAP because I anchored the VWAP at the point of exhaustion in the smash through Asia high. We're tagging it right now because that could be a point either for further upside if we're going to say that this failed to the downside. But let's see what they do. Or it's going to be a mean reversion. Some bigger sell orders are sitting on the big silver, so I'm just going to switch to this. Look at that. And let's see if they disappear. Let's see if this is a spoof or whether they trade out. So 5520. And because they're so big, somebody is going to hunt them. It's not going to be like, oh yeah, it's going away without us. I mean, maybe sometimes they chase, but you know, such a large player, usually they will be eager to take that. So let's wait. And let's see whether they disappear. Okay, so we're there now, almost. I mean, they're still there. And let's see if they trade out. So remember, it's a large seller. I mean, the fact that they're still sat there and we're this close and they're not disappearing, this could be a real order, you know? Is it a spoof? Is it not a spoof? Nobody knows. So we'll see when 52 gets tagged. Okay, so yeah, they're trading out. We've got 29 contracts filled. Are they iceberging? I mean, they're still there. Let's see if there's more of these 12s. So we had 12, 111, 33. But they generally, I have a large lot indicator on BookWeb, so 29 of those got filled. So got 81 left. They're still there. I mean, should we go with them? Shall we go with them? Let's follow. Let's follow the big boys. Let's do a 2 lot because it's just the first one. All right, so now we wait to see whether they can actually commit to the downside or whether they're gonna, you know, they can get absorbed as well. It's just that 86 is quite a big, quite a big order there. So I'm gonna put the real dome on the side. This one's too big for these accounts. It's just basically so you can track what the big boys are doing because you can't see that in the micros. Whenever I'm referencing order flow events, I always want to use the big contract, even though I may not trade it on the account in question, but I might use it for reference because you can't look at a micro and expect that this sort of stuff is going to happen there because the big boys don't trade micros, right? They'll be like, yeah, whatever, man. So, okay, so, you know, they traded out some of them, not all of them. So maybe let's see what they do. You know, let's see what they do. Because we still have 70 contracts left for them to fill. And sometimes it's funny, you see them chasing. Like if it's a real order, they start to chase. So you see them up at 52. And then the price moves away from them. Then they suddenly appear at like 500. It's like, you're chasing, I see you. And yeah, sometimes it's a spoof. So what makes me believe that it's not a spoof is that we are literally sitting, you know, you saw there was like, what, 120 contracts? And as the price got close to it, they stayed. And then some of them traded out. That means it's a real order. That means somebody here is either getting rid of some inventory, so shorting, as in like getting out of positions, longs, or they're maybe initiating a new one. I don't know. I don't know, but I don't want to be against these guys. Especially knowing that at this time you do have that mean reversion. And true, it's not really looking like super smooth because we kind of tested Asia high, busted through it, reversed, then retested it. That's generally a bad idea. But now we do have a minor, tiny, itty bitty failed auction because we wicked above the initial bounce high. And now we're going below this anchored VWAP that I'm using from the previous London Open sort of smash above Asia high. So if we can't tackle that, and we have this big boy here sitting, kind of stalking, waiting, it could be okay. So we'll see. But yeah, 63 contracts still there. So there was 70. So he filled another few, or somebody grabbed some. And delta is negative, right? So somebody just either decided to smash through all of that and absorb it with longs. Let's see what happens at Asia high. Let's sit and wait. This was maybe the liquidity grab, maybe. So let's see. Are they going to continue? Negative delta. But yeah, somebody just literally scooped up all of these orders to the opposite side. So lifting the offer with a sweep. So what happens after the sweep? Let's see. If you hear a bit of coughing, that's my cavalier. Right, Asia high yet again. Is that a bad sign for shorts? Maybe. But all of this is taking like forever. So if it's taking too long for a mean reversion, might not be a mean reversion. I'm going to close this for now because I don't really want to see here. And that seller was basically absorbed completely. So whoever was doing that, they have some other ideas. A mean reversion shouldn't take this long, right? So there's a time component that I expect something to happen, and then if they are not doing that and they keep hanging around the reference point, it's not a mean reversion, right? But yeah, so let's now see if we can confidently break. So this is now more strength from inside the initial balance. You saw that they tested this VWAP. They're rejecting to the upside. So instead, and that big seller was absorbed. It's just not there anymore. So let's see if we can get some momentum upside towards this 8-year high. And I'm going to see where the next sort of important options level is. I mean, there's some minor levels with open interests, and anything better in... Okay, so gold does have GEX3 at 42.25. So that could be an idea. But we do need to see some commitment now with both volume, shaving off negative delta, and then just going into yet another leg up. Because I don't think we're going to mean revert here. Not today. I'm also going to switch from a 5-minute to a 15-minute, so you can see how this looked like a distribution, right? It was very, very even. But it's actually a reaccumulation now, especially if we carry on higher. And this is an event that kind of happens about 25% of the time. So continuation above the Asia high. Usually you have 70 to 75 times where you... percentages. So, you know, you get 70% of a probability that you're going to mean revert after the London Open and after it tags Asia high. When that doesn't happen, or when it takes too long, you have to consider the other side. And I know I said, oh, I don't want to long it here, but I'm not going to, you know, I'm not going to go against this because I feel that it's too high. Too high for what? If we are not failing into the auction, if we're sticking above the gamma wall at 52, if we're not even tagging the London Open after we tagged Asia high, the mean reversion D again needs to pipe down, right? And if this doesn't move, and if we do still get a consolidation for this time of the day, so be it, it's fine. But we're sitting just above Asia high. So this is what annoys me about this time of the day, where it's a weird period where nothing much is happening. It's like they're kind of pulling, doing the tug of war, tug of war, tug of war, tug of war, and it carries on for like, how long have I been on? For half an hour, right? And I'm like, do something. Do anything. But no, they're like, Asia high, a little bit down. Back to Asia high, a little bit down. Yeah. And it's like, so this is what, like, personally my mental trigger is, because I'm like, I don't like ranges, tight ranges. I like ranges when they're like, neutral day type. You have, some space to work with. When they're super tight, I absolutely despise them. I'm like, come on. Because it's just painful. Spend 90 minutes staring at a range. And you're like, what am I doing? Come on. All right. Let's have a look at some chat. Jesus only loves. What are your thoughts on gold and rates? Rates, I mean, I don't know. I don't want to guess. We'll find out. Eric says, did you observe any new insights working with Season 3 VIP traders that could help viewers on your stream? Love your work. Thanks for sharing. Nothing new. Very regular behaviors. So oversizing, rushing, and then taking about 2.5 months. Overtrading, oversizing, rushing. Too much size, too many trades. Not big enough sample size to figure out what your real accuracy is. And then it basically goes to 2.5 months of training. Some people, usually we get about 5 or 6 people that are ultra coachable, and they will really take on what the coach is saying. But for most others, unfortunately, it's the same. So same as the previous season, it takes 2 months, 2.5 months for them to go, well, the last 2 weeks I've been applying what you've been saying and it's working. And I'm like, why did it take you 2 months? And yeah. How do you get the numbers in red and green to show on the dome at different price levels? That's called level 2 data, and it is an add-on. You have to pay for it. So that is, Bruno, correct me, but $39. And it is in add-ons in the new dashboard, which I'm getting to know, because I'm on the old dashboard, so now I'm trying to switch. But yeah, so it is level 2. So without level 2, we do not have order flow. We do not see what the big boys are doing. We don't have bookmap. We don't have anything. And then you just have price. So yeah. All right, so they are exhibiting some strength. I'm looking at how the orders are looking. I mean, I suppose we have some, like the delta is still negative. That's very interesting to me. But they do have some consecutive green bars. So yeah, it looks like we might be going into a new higher high and into, are we going to get the new all-time high? All-time high in silver? Are we going to get it? Is it going to be the day? I don't know. Should we do like a crazy target? Like, up here? It's like, yes, this is my version of full porting, meaning taking the entirety of whatever the day gives you. So if it's an outlier day, I mean, this could just keep going past ADR. And in that case, I mean, I'm being funny, right? It would probably not going to get all the way up here. If we do, amazing, but no. So to me, I think a more realistic target would probably be just a little overshoot above the 53.50, but you never know. Somebody with a lot of money might come in and they might like plow in about 200-300 silver contracts. They're there. Like I can see that, like 59.35. This is big size. Usually silver you don't really see more than about 10, 12, 14, 2. That's like the usual. And then suddenly 35 and 59, those would be considered big orders. Because remember that silver is like big silver. the big silver, is $25 per tick. Okay, so if you have a position that's like 59, that's like per tick, a position size of 59 is per tick $1,475. So that means even if you want to use a stop loss that's only, like, let's say what I'm using, 45 ticks, right? That would cost you $66,000. So whoever is trading this is not retail. You know, if you can risk a car, literally, like, you know, risk a Tesla or BMW, you would you'll definitely have some deep pockets there. So, you know, like I don't want to risk 66K on one position. it close to the all-time highs, but they obviously had different ideas. So, yeah. Yeah, so Bruno's saying in regards to the depth of market, it might be cheaper within the new dashboard, the level 2 data, but depending on where you are. So for example, I'm in the UK, so they have to charge VAT. I actually saw something on Twitter where people are like, oh yeah, it's such a scam. They're charging those of us in the UK and EU more. Dude, it's called VAT, right? And I'm actually surprised at how many prop companies don't charge VAT to UK. Then that is not very legal, I will say. And it's very, very dodge, right? Not to charge VAT to the UK and EU customers. Because that's how it should be, right? And then in theory, you know, you get, if you're a business to business, like for example, if I'm buying something as a business, I would also have to, you know, pay VAT to that business. But then, you know, you can't kind of get it back if you're VAT registered and whatever. But yeah, I'm actually pretty surprised how many prop firms are just like same, you know, same price for everybody. It's like, it's not really above board. So I actually applaud Topstep. I know that from the end user standpoint, that go bad, but it's the law. It's like that's how it has to be. So yeah. So it depends where you're located. If you're located in the US, you probably don't have additional VAT. But for those of us in Germany, UK, Italy, and anywhere Europe, anywhere that has any sort of value-added tax, that will be yeah. Does level 2 data show delta? So in TSX we don't yet we don't have delta indicator yet. So I have my own tools. Obviously, you know, I traded for 19 years before TopstepX came along. So naturally, all of us who have been around the block for so many years, we have our own ways of doing things. So I quite like Bookmap. You know, you have Hogue, he quite likes the previous platform that we used to use at Topstep, which was CTST4. They used to have cumulative delta, but I have one on Bookmap. So here it is. And it shows me it. We are actually shaving off some negative delta. So we were at minus 500. Now we are minus 356. How long will I hold on to a trade like this? It depends how it goes. Like if this one sticks above the initial balance high and above the Asia high with no real, you know, drama, I may hold this all the way to the London fix, which is 12 p.m. my time, so noon, London noon. And then maybe, just maybe, if the London fix doesn't bring any sort of a meaningful sharp reversal, which is what is expected for that time of day, then I might hold it up to COMEX open, but no further than that, because like unless I'm a million ticks away from my entry price, then maybe I'll be like, you know what, I probably have enough space to handle the head fake for COMEX. COMEX usually goes the wrong way for the first 15 minutes or so. and then it kind of shows up where it wants to carry on. So if you want to hold through the next exchange open that has a lot more volume, a lot more movement, and it's generally a risk to hold any new positions through it that you kind of held from London, because it's different volume, different ATR, right? Everything amplifies. But if I have enough space, like let's say if we get way over to the ADR and then we're sitting at ADR, you know, at that point I'll probably have about 70 to 100 ticks of profit. And then I can decide, I can, you know, see how the large volume is behaving, you know, drop down to like a 5-minute chart and see how COMEX is doing things. But if I manage to survive that and it pushes into further upside, then that's kind of an intraday swing. But the reason why I would hold longs longer than shorts, and why I was out of my short before, like for me that was a very quick exit, it's because everything is in an uptrend. In an uptrend, all supplies will eventually be broken. So naturally I want to be more aggressive on the hold times with the trend. But if I want to short it, it's not like, ooh, don't short the top. I will. I will definitely try if the conditions are right. But I won't hold it if I'm not getting what I want to see. So, you know, I had multiple things that were not lining up there. I was like, okay, so we retested Asia high several times. I know this probabilistically that if we smashed through Asia high, we should have been already trading to the other side. Yeah, there was a large player there, but he got absorbed. And now we're sitting above Asia high and initial bounce high. So how long do you keep it? For as long as the market tells you that it's okay to keep it, right? And that's situational awareness. That's where, you know, you need to chill. You need to have some longer time frame reference points rather than like a 2-minute chart or a 15-second chart. Because if you're staring at low time frames, that will take you out very clearly. So once I have my entry that I believe is right, I will use a 30-minute time frame, and I won't drop down any lower, because now I'm looking for a bigger move towards the ADR. So it's like, what do I need to stare at a 15-second chart for? And, you know, bookmap at this point is not much use either for another 15 minutes, right? So if we start to struggle, if he starts to fail the auction, or this selling wick is a bit scary, and we turn into some sort of a hammer or something, I may have to, you know, get back to bookmap, see granularly what's going on. But right now, there's nothing else for me to do. It's just like, you know. Whereas people enter a, you know, a breakout, and then they're like, what's going on a 100-tick chart? And it's like, just relax, man. Just, you know, breathe. Let's see how the 30-minute time frame ends. Like, we have it above the initial bounce high. It's above the Asia high. If it's a continuation, it's a continuation. Me staring and losing my eyes and bleeding my eyes out on like tiny time frames at this point is not going to help anything. Would I take my stop loss to break even? Absolutely not. No, I never do that. I might do, well, not never. I might do that in cases where maybe I don't know. So here's the thing. Very rarely will I put my stop to break even. Very, very rarely. And even then, it will probably be just a portion of the position. Like, let's say I'm in with 3, right? And then I get a fair amount of movement. But then I have to step away from the desk. Like, I can't maybe watch it because, I don't know, one of my dogs throws up or something. I will put one of those contracts on break even, but the other 2 still wherever they are. I don't like break-evens because, think about it. I have people claiming 75, 80% accuracy, but a lot of those are break-evens. What are those scratch trades doing for your P&L? And are they really the accuracy? So when you remove the scratch trades, what accuracy are you really left with? And if that is not 65, 70%, and you're still trading with negative risk reward, That would be the reason why everything's slow and why you're not really advancing your P&L, because your true accuracy is nowhere near that, okay? But the scratch trades, false economy protecting trades, it's kind of giving you a false sense of high accuracy. And then you're like, well, I can have negative risk reward. Not everybody, right? Not everybody, but I've seen so many people who claim one accuracy, and then I asked them to trade through a do or die method where they don't touch stops or they get 2R. We get a very different picture there. So because then you see the quality of the setups that you're taking when you let a trade do whatever it's supposed to do. And really, I take trades that, yeah, I might get hit on the first one, but the second one usually has much more juice in it. And that's why I never freak out. I'm like perfectly happy sitting around 40 to 56% on average. Do I have moments when I'm close to 70%? Yeah, but that's not, it won't last basically. However, I usually maintain a higher risk reward. So it all kind of evens out. So, I mean, there are a million ways of doing this. I'm just always surprised at how would I say it? How high on hopium some people are. And, they're not, like, for example, they would claim super high accuracy in a combine that they've spent 2 days in. So I'm like, well, what about the times that you messed up combines? Because you said you lost the counts. And they're like, yeah. So what about the stats from those? Like, surely you didn't have 80% there. Why? I don't know. That one got close. And I'm like, did you not export the data? No. Okay. So next time you blow up, why didn't you export the data with all of the horrendous things that you did in there? And let's see how all of that plays into your entire system. And then we're going to create a risk model on the worst case scenario, not the best case scenario, because again, that's higher hopium, right? So yeah, that's just, how I look at things. But I don't like break-evens because math is not mathing, frankly. I would literally be rather partialing at like 2R multiples if I want to carry it on, than moving my stops to break even. But again, I would rarely partial at 1R. Because again, if you want to get positive risk reward, let's say that I'm shooting for a double, so 2R. If I partial half at 1R, but my trade arrives at 2R at some point, net that is only going to get me barely 1.3R. I have a problem with that because it's like I caught this really big move. Why did I mess around with the position size? Why didn't I just hold it? So over the years, and this was like something that I struggled with early on because everybody around you, whoever you spoke to, they're like, oh, you need to protect your position. So I would do break even, get out of a position because it would take me out, and then it would go straight to my 5-hour target. I was a swing trader. So I'm like, this is stupid. So I'm going to stop doing this. So I stopped, and then suddenly my whole system just transformed, right? Suddenly I started getting these big bumper days. I wasn't an intraday trader back then, it was swing trading. So I would sit in a trade for like 2 weeks, and then I would have this like big, nice chunk of a cushion that I can use on the next trade, and you can size up a bit as well. So but intraday, I also started doing the whole partialing, and then at one point I was partialing at a third, so three lots, partial at 1/3, partial at sort of like 1R, and then leave the rest to run. Again, maths was not mathing because I'm like, this is too slow. Like the gains are not, like, what am I doing? So I had, again, decided to run a test. I'm like, let's see how we can do this if I leave it to get to 2R. So I'm not going to go for a super ambitious target. It's just going to be 2R, right? Just a double. And I was shocked that even though I would get hit on like about 50% of the positions, not all the time, but just generally speaking, then the P&L curve was so much faster when I let the entire position run to 2R at the very least. So I was like, okay, well, to me, that settles it because data is data, right? It doesn't lie. Right, let's see what they want to do with this Asia high. But again, this time of day, my least favorite time of day to trade metals. This is why. A lot of messing around. So, but yeah, so for me, the take profit for this kind of trade would not be 2R or 3R or anything. It would be just see how it behaves to ADR high. That would be the first step. I mean, the first step is stick away from the Asia high at the point of 30-minute close. So we've got 7 minutes until that happens. We're still in danger of this going into a failed auction, obviously, at this summer day. But again, I wait for the 30-minute time frame to close. Here's that tag from the highest volume bar that smashed through the Asia high. And it could be that we just need to give it time for this whole gamma pinning to happen. So we have GEX 1 as well at, what is that? 52.50 is GEX 1. So I would say that's probably our orientation here. So in this little consolidating range, which you can probably see better here, so you can call that a rally base rally if we turn it into a rally. But yeah, 52.50 is the orientation. This is now a test of the initial balance. We'll see what they want to do. Again, very normal. Nothing goes up in a straight line, especially not at this time of day. So close above the initial balance would be ideal. So let me just see. You can argue, okay, it wasn't quite. I mean, it sort of tried it. If I show you the 30-minute time frame, if I show you my chart here, the silver chart, is this above it? I don't think so. So it just missed it, right? So we still need to wait for another 5 minutes before we see what's going to happen here. So again, focusing on the 30-minute time frame, expecting the tests of the initial balance, because that's the norm. Using the 55.50 as an orientation point, maybe even a scaling point if we get there. And just giving it time. Just giving it time to breathe. So don't drop down. Don't look at this wick. This is an intra-candle wick now. And if it ends with a wick, then in 4 minutes we will see what they want to do. But right now, this is all just intraday nonsense, right? How to get those highs and lows on the chart? You sit down half an hour before the stream, and then you look at one charting platform, and then you go click, plop, name it. Very, very technical thing. Yeah, so unfortunately, all of these are my manual markers. What's not manual, so the volume, the visible volume profile here, and the fixed volume profile there. But even this one requires a little bit of arm wrestling because you have to like put it on the chart. Now, luckily, on my Blotic indicators, which I have on AMP MT5, which is what this is, they do them automatically. So that is what I wanted. I spec'd them out. I commissioned them. They are my life's work. And I wanted it overlaid on candles. And I also wanted multi-time frames for the supply and demand. And all of that, you can see there's a supply from a larger time frame, which is daily. No, actually, this is it's a daily chart. It overlays the ADRs, so that is definitely an area of interest. But yeah, it can change through COMEX and NYMEX. We can see we're ignoring the 4-hour Q high. Q high is a quartile of the previously established swing, so that's been ignored. Again, very unusual. So yeah, we just now wait. But the way I do these lines is I look at the reference thing, plop them on the chart, name them, move them. Look at it on the chart, change coordinates, So I do that, like, you know, you think I'm doing my face. This takes like all in like 10 minutes maybe. This, like all the little things, that takes me literally like 20 to 30 minutes to transfer everything. Now, sometimes I'm a bit lazy and then I will do that as I start the stream, and then you kind of see me putting the lines on for the first like half an hour of the stream. And, you know, it just depends. So, yeah. But yeah, highs and lows, I literally just look for the Asia high, Asia low. I will look at Globex Open, and here we go. So that's 11. So where was the low? There was the low. Where was the high? Well, you look at before Eurex and London. So what was the high? That becomes your reference points. And I like to use yellow because it's nice and high contrast for my aging eyes. So yeah. But yeah, Desmond, for now, I don't, like I said, I don't have a take profit. I'm just observing. So it's too early to kind of say take profit, but as a rough idea to fill the range to the upside. So ADR high, 53.22 would be a pretty good one. And then what would be, what is that in our multiples? So let me just put in. So what is the intrinsic profit margin for this trade, to use some options? So intrinsic something means that it's already a part of the actual profit expectation, right? Because of where the thing is, and typically it's an options thing for in the money options. It's like it has an intrinsic value of that many dollars. But I like to use the same for any sort of a trade that doesn't really have much in the way. So if I go all the way, what do we have? We have the all-time highs at 52.90. So I would say that 53.22 as the ADR high is definitely a possibility. But where is the ultimate high? 55. So that in an uptrend, you would expect that to tag. So if there's a true uptrend, it should not, like all the inside highs, might cause a bit of trouble. Like we've seen a little bit of a wick down. But ultimately, the strength of the trend means that all supplies in an uptrend will be broken. There are times when they do a liquidity vacuum sweep above the previous all-time high, and then they run it down. Once we get there, we can start looking for that. But for now, very spiky inside price action, inside bars. So why do I say that? Because it's not smooth. It'd be spiky, right? Spike, 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 spike. But it also could tell a story. Could tell a story of passive buyers. So as we're dipping down, they're running into some people who are sitting on the dome and waiting for more buys, and then it keeps lifting the offers, and it keeps lifting the offers. So that is definitely something as a possibility, but to me, this is just a snooze fest today. Let's see what they want to do. But yeah, again, not my favorite time for metals at all. And, you know, looking at what DAX is doing today. Just to look for an alternative. DAX is failing the auction. And it's above the high, so maybe that could be a trade. Yeah. Just gonna check where we are. Okay, let's try long DAX. Again, just 2. What's the ATR? Can I get away with, maybe get away with 45 as well? All right, let's see if long DAX can do something. So I've got an entry at 23,556 is the ultimate entry on DAX. $45 ticks top. And let's see if we can get more movement out of that. And again, no, you cannot trade DAX on Topstep yet. Do not ask me when DAX. I do not know. But I know that many of you do trade DAX elsewhere, so. And so do I. This is why we make these streams. And then here we are trading silver. Now, silver, it's still fine. So we are still now testing. So the previous 30-minute time frame, what did it do? Close the TPO above it. This is all just now testing things. And again, those passive buyers are appearing once again. So let's see if they keep lifting the offers. Let's see if these guys here get run over with a sweep of some sort, because that's a big order. That would be a nice lift. But where, so here's where the context comes in. Where we are right now, and how the price is behaving here, it just doesn't make sense to go short. Maybe once we get to London fix at midday, maybe. But for now, the way this is looking like it wants to go into continuation. Asia high is being resisting. Has been resisting arrest, and it's been constantly reactive to this VWAP that I plotted from the highest volume bar that we had so far in the session. We keep dipping down to it, coming away from it, dipping down. Like, how many times can they assault it? I don't know. It might break, but until it does, I will still stay on the 30-minute time frame and just wait. 7 agrees. Bro. So yeah, let's see what silver wants to do. Let's have a look at chat. Does the top on silver from the 19th of this month change your analysis on the current uptrend? Top of this month, it changes it in a way that, yeah, that's probably where we're going. So it's like, if this was a true like reversion after an all-time high, it would look a little different, right? The wick would be horrendously massive, right? So you saw that in the previous month. So this is what a true sort of reversion is. This one opened up, carried on, smashed into all-time high, slight pullback. But to me, this is just a normal size candle. And we are coming into the end of the month, so we will know in a few days. Or actually, because it's a short week and it's Thanksgiving tomorrow, that will be it. So, yeah, I mean, Friday is probably a half day, isn't it? But yeah, so, oops. What is this? What happened here? Something odd happened to the VWAP. It got confused. I'm confused. Okay. There we go. Again, passive buyer. Putting it back up. Yeah, so Thursday and Friday obviously will be off air, but there are Thursday and Friday are probably like half days or something. I need to look at the schedule. Usually they are either closed or it's like a half day. And you shouldn't. I mean, if you do end up trading, like I would say, please don't. Like, why? Just gonna spend time with your family. But if you do, then just be careful. like size down, you know, holidays. Okay, so my little, well, so here's what I expect. You know, when I enter a trade at this time of the day, this is what I would expect. You know, you enter a trade, you see some movement, your 26 ticks in profit. What do we have on silver? I entered a trade, what, half an hour ago? And we're saying 10 ticks, and it's like, KMN. But it is what it is, right? So we just have to take it. Take the pain. But yeah, DAX is definitely still my favorite. So fingers crossed. And don't ask me when MP is going to bring DAX, please. I don't know. Go ask him. He's got a lot on his plate right now. All right, so here we go. So Bruno has given me the guidelines here. So let's have a look. Topstep X. So trading, if you're in an XFA, you need to close positions by basically midday, well, 15 minutes before noon, so 11:45 a.m. Central. That is 11. So that's just before 6 p.m. my time. And that is tomorrow. Now, well, most of this is not, we don't have Rhythmic and Tradeovate and all of that anymore, so it's just Topstep X. Yeah, so it's a short day. It's basically a tiny day. Tiny day. Yeah. All right. So my DAX is doing pretty well. We're getting a little bit of movement, but again, 11 ticks. Still no invalidation. So let's go to the 30-minute time frame. Buying wick again. Buying wick. And we have 20 minutes. And now we turn positive. So again, nothing to do. The big seller that was here was taken, and they basically just ate up the offer and lifted it up to the sky. So yeah, for now there's no invalidation. Everything's fine, but it's just slow. It's very slow. So DAX on the other hand, tagging VWAP, trying to go into failed auction. And if you want a marker from where I entered, so 556. Again, it might, you know, spend some time doing things. 556. Okay, hold on. And then 511 was the actual stop there. That's what that looks like on the chart. 2R multiples is my target on that. If it starts to get annoying around VWAP, we'll take it off. But for now, it looks like they are pushing, so I'm just going to look at tape on DAX as well. I mean, nothing unusual. Positive movement. All consecutive bars are green. Yeah, it's pretty drama-free, that. All right, so finally, silver moves. We now have 160 lot here. That might get taken as well. So we'll see how that happens. Did you guys watch my Mentor Q webinar yesterday? Because I went live with Fabio. It was a decent discussion. We had a couple of good questions. All right, so again, pause off the mouse, nothing to do. Hold the trade. Now, once I find the direction, this is where my strength is, I can ride these for as long as the market permits. So it's to me, it's very easy to relax into a trade once I get, you know, the 30-minute time frame confirmation. And it's not like, oh yeah, now I can be completely hands off. No, now I just monitor it every 30 minutes and I see how the auction is. Now, granted, the auction is not super big now. It's at best it's like, I would assign it maybe a B, because it started off a B. It started off kind of as a bit of a tough distribution. So if you look at it on this chart, you can see that we distributed we distributed quite a lot before that run up. So that is always difficult. It's really tough to kind of stay with your hypothesis when that's happening. Furthermore, to me, this is pretty high up. So, and I know that as a mean reversion trader, I do need to shut up today because this is not a mean reversion opportunity. So therefore, this is the point where the natural side of me has to be quiet. Like, it's like, pipe down, D. Do not try and short this. And I tried shorting it. It didn't work, right? And we didn't get any of the signs that a mean reversion is on. And now we're sitting above the initial balance. We are sitting above Asia high. Is it the strongest move? No. So I still need to make sure that I'm not fighting to like short this just because it's so high up, because silver is in an uptrend. That sort of an approach doesn't work until there are very, very special conditions there. I did try short on the basis that 75% of the time we do get the Asia high smash, then a return to the London open, and then we have another area of, or another time of dangerous events where sharp reversals can happen. That is into the London fix. So that starts usually around 11:30, and that's when LME opens. So it's like, that's a very dangerous time. And yes, sharp reversals can happen, but I would prefer to be at ADR high by then, because I do still have, another hour or so before that happens. So for now, I'm just tracking what's going on the 30-minute time frame. And you can see every time we go down to that VWAP with an orientation, somebody bought it. And they keep kind of bringing it back out of the initial balance range. Could be a sign of institutional traders continuing to trade to the upside. And at this point, the mean reversion D has to just go sit in the corner on the naughty step. So yeah, there's not much else to say here. I mean, it's a quiet day. It started off promising, but then right now, I doubt that we're going to see like proper commitment to the move until we get closer to LME. I don't know, could be surprised, but I don't think we have anything much to drive it. Can I smoothly trade in MBT in Topstep? I don't know. I don't trade MBT, and can you smoothly trade? Only you can answer that. No, I don't know what that question means. Can you elaborate actually? Because I'm now very interested. Can I smoothly trade in MBT and Topstep X? I mean, you can trade MBT. Whether it's smooth or not, it obviously depends on the setup. Your skills. Like, how smooth are you? I don't know. I don't know what to want. Oh man. Okay, anyways, let's move on. Yeah. Yeah, watching paint dry, absolutely. And if I wasn't doing the stream, I would probably go sit and play some video games, or maybe catch up on some admin or something. But yeah, to me this would be very, very slow. Yeah. Do I trade privately from AMP account or from Interactive Brokers account, and why? So on AMP account we have a corporate account. I don't have. I mean, I suppose I have one account in euros over there, which is kind of for for like some European products and stuff, but it's not massive. Now, on the corporate account, we do have mechanical trading algorithms, so I'm not really the one clicking buttons there, if that makes sense, but it is my strategies. But yeah, it's not just me making decisions. We have a team that's like working with me on that. And for the most part, we're just like switching things on and off. That's my job. Like, should I switch on the mean reversion bot, or should I switch on the trending bot today? That is what I do. But then I do have a ninja sort of YOLO account. And I call it YOLO account. It's not like a full port there, but I do tend to trade more, I suppose. And I will do like more sort of punt trades. So yeah, definitely. But, you know, diversifying, you know, having different strategies, different accounts. And then I do have the interactive brokers account as well, which is for options alone, and also for some longer term sort of stock plays. So I will, you know, look at like longer term plays whenever we get a big pullback in equities, and then I will pick some new stocks to kind of do a bit of bargain hunting. But yeah, it's just every account is designated for a different purpose. Would I recommend that to beginners? No, because when I started 18, 19 years ago, I only needed one, you know, and I didn't need multiple strategies, one swing, one day trading, one options, one this, because I didn't know enough, right? And even if I did know, it would still be very overwhelming for me back then. But over time, you know, you get some success as a swing trader. Then you go into intraday. Then you learn about all this other fancy stuff. Then you're like, okay, well, I think I can kind of grapple with options now. Then you start learning about options, and that's a whole can of worms in its own right. And then after a few years, you're like, all right, I get it now. Okay, I've made some money there as well. What else can I do? All right, then now we're trading DAX because I went to work for a London prop firm. Everybody was trading. So I'm like, okay, well, I would like to have an account just for that purpose. But I don't want to trade it in USD. I want to trade it in euros. So then you open an account. So that's how it happens, right? It's just like an organic thing that over time you find a need that you need an account where you're just going to do this or you're just going to do that. And, you know, this is why having multiple accounts, even in prop, that's what I would use them for, right? So testing different products. Let's say you just traded NQ, but then you come here, you like how silver moves later in the day, and you're like, actually, or during Asia, and you go, yeah, actually, I'm going to get a combine just to test how I'm doing with silver for Asia, for example. And then you get some data behind it. Maybe even you get an XFA. So what do you do with that? Well, you don't smush NQ and new silver into all of that new XFA. You would just designate that XFA for the silver. And this is where I struggle a little bit in just one account, because due to the nature of, you know, contracting and stuff, I have to do the morning stream. But I also have to be sometimes a part of the main broadcast, and that's usually for the CME products. That used to be my main time. So you know, for me, it's like, well, if London doesn't go well, what do I do? Do I just not trade the CME now? Whereas when you have multiple accounts, you're like, okay, well, now I can go to the one that's designated for the CME and just play that. But you can't do that in one account. So that is the reason for me having like more than one account, if that makes sense, on the personal side. So, you know, each account has a purpose. One is an options account, one is a Euro account, and another one is sort of like a little bit of everything. And then we have the corporate, which is basically a company. So, yeah. What video games do you play? So I used to be a big RPG person before I got sick. I do find combat really difficult these days. So I used to be a huge fan of Assassin's Creed. Like anytime you can like sneak and kill people, that was me. But when I got sick, I think I have this it's like an auditory problem with certain super bright lights. Like, I'm surprised that on a lot of the days this doesn't bother me. But again, it's not the video game like screamy sort of HDR, super bright, everything. So that started to bother me like 3.5, 4 years ago. So now I prefer games where, yes, there's maybe a bit of combat, but it's not too focused on combat. So I quite like sort of survival games where you get to build stuff and you have to like create your own tools, kind of like Fallout type stuff. But I also really love Subnautica. I played both Subnautica and Subnautica Below Zero. I just finished Death Stranding. Now, Death Stranding is more like a driving simulator, I would say, or you're basically a courier in a very odd world. And loved Death Stranding. Had no idea what it was all about. It was like, there's a beast, there's ghosts, like what? But I like weird shit, so that is kind of something I enjoyed. So I got Death Stranding 2. Just finished it literally like a few weeks ago. So that's like what I do on the weekends. I on my day off, I'm a very boring person. I go do dog walking, video games, and that's pretty much my day. So very, very I don't go out. I don't like going out. It's too loud. Don't like bars. I spend most of my life in bars as a musician. You can't talk to people. It's too loud to talk. So yeah. So what am I playing right now? So I've just finished Forever Skies. I'm waiting for it was a little bit repetitive, but I quite liked the fact that you had to go and find different bits and pieces. You kind of have to find synthetics. You have to find these different sort of blueprints for the machine and then research it and then build it. So those are the kind of games that I really enjoyed. I played Ark Survival, so that was pretty nice. Obviously Fallout back in the day, but I'm on PS5 now, and I think they kind of upgraded it, but I don't think they did anything particularly new. So yeah. Coral Tank says I play the same game. Nice. Can you please show the level 2 data for GC as well as for big order? So let's see. So for GC, here we go. Frankly, I don't see that many things. I think that silver has a cleaner tape today. I mean, do you see any big orders on gold? I don't, but I see them on silver. This is why I say that silver has been a cleaner trade. I don't know, man. Gold has gone a bit weird. Like, I know that it looks on paper, but look at it now. Like, 30 minutes on both of them. Which one looks better to you? Which one of these looks like it's a trending move? I don't know. Do you know? This one? Or this one? To me, gold looks like watching paint dry, right? It actually looks more like it's going to mean revert than silver. Silver looks like it's continuing once it started. And tape also tells us that, right? So there are no big boys on gold yet. Like, nobody's around. Maybe they've all gone to visit their families for Thanksgiving. But the silver people are like, no, we're still trading. We need to trade. So yeah, I just find silver smoother these days, I guess. And this is probably why, because at the time when I want to trade it, gold does F all. Try and keep it PG. And silver actually makes a move. Like, it's a little bit choppy, right? We have a lot of wicks both sides, but it's kind of pushing. Like, it's looking much better. What sort of other video games? So I just went through like a whole bunch of weird video games. So I went through Deliver Us the Moon. Oh my god, was that a depressing ending? Did not expect that. So now I don't know whether I should play the sequel. It's a game that came out. It's a short game, right? But it's kind of in space. Again, you're going through a storyline. It's not really survival, so I don't think you're building anything, but you have to like go to different locations and move stuff around. So it's more like a puzzle game, but it's in space, so I like it. Anything with space, and that's amazing. So I was looking at a new game. What was it? But it didn't come to It's not on PS5, unfortunately, which is what I've got right now. That's my Cavalier. He's unfortunately coughing. I had to take him to another echo scan because we're planning some new medications for him. Not water, because that's like, you know, they can't even hear water in his lungs, which is really odd. So we're gonna try him on some super new medication, but we need to have an echo first. He had one a couple of years ago. He's done so well, but now he's coughing more, so there's obviously a progression. And he's old, right? So my doggy, the daddy Lenny, he's over 13 now, and he's a King Charles Cavalier, so they definitely have problems with their hearts. So what other games? Hold on, it escapes me now. I don't know. I can't find it now. But there was a game that I liked the look of, and then I looked it up, and it's like, oh, it's not on PS5 yet. And I'm like, great. But yeah. What do I think of M&Q? Hate the thing. I have zero opinion. I mean, if it's correlating with DAX, I can have a look. Let me have a little gander. It's reclaimed VWAP, you know. Let's see. Gone above the gamma wall. It looks bullish for now, but anything can happen as we get closer and closer. Yeah. Why is silver Joe expensive, more expensive than gold on micros? Because the big boy silver is more expensive than gold. So one tick in silver is $25, full silver, and gold is 10. So equally is going to be doubly expensive on the micro. So it's not a real micro. It's not a real micro. That's why you have to be super careful what you do with it. And if you're going to be wrong, you have to cut it quickly. At least that's how I look at it. But even so, for me, silver is just about acceptable in 150K combined with 4.5K max drawdown. Not acceptable at all on the 50Ks or even 100Ks because, you know, one trade, the way I trade it on a 45 tick stop, the least amount of risk that I can use is $225. And that means I would probably have to cut it at like I did here at 160. And then if it doesn't work out, I need to like just leave it alone. Otherwise it gets super expensive. So I like to trade 2 and 3 in my combines. And then when I get to any kind of funded stages, I massively size down for the first period. But on silver, you can't do that. So, you know, you have to be, like, if you get to the funded stage in silver, you have to be super careful with your setups and not trade a million trades. Because I've always said it. Too much size, too many trades, too low of a maximum loss availability. So how much money you're working with. Those three don't go together, right? You can't have all three. You can have 1 trade, 2 trades per day with size. Or you can have lots of trades per day with a tiny size. But not both. You know, not on these accounts. They're too small to begin with. Sure, you build, you know, over time. You build up the balance. But, you know, it's... I think the biggest mistake that people make is they overtrade with too much size on an account that has high risk of ruin because of what you're doing to it. So, you know, 4.5K is a good starting point for micros, But maybe if you're trading silver or you're trying to trade silver and you're not experienced in it, maybe silver is not for you, you know. Maybe get some experience, maybe do some experimenting on the combines first. And then once you have confidence that you can snipe it in 1 or 2 trades and get a very good, at least second trade out of it. Like, look, sometimes I get to euro close and I haven't done a silver trade. And then I catch the reversal. And that is the only trade I do in silver that day. Why? Because it's expensive. And if the first one worked out and I make, you know, 400, 500, 600 out of it, I'm like, I'm done. That job done. Where's the video game? So you have to have some sort of a design distraction if you want to use that approach. But just know that too much size, so oversizing, overtrading, too many trades, it's a recipe for disaster. You know, and then sometimes you see people who are like, oh yeah, you know, I've got a 50K account. I want to make 10 grand this month. And I'm like, that's a 500% return in a month. Good luck. How's that going to work? And yeah, look, they might do it in 1 month. But then that same approach of too much size, too many trades, it comes to bite them the next month. So even if they survive the first 2 weeks of the funded account, it's just not sustainable. It's not sustainable. So I'm trying to run these classes to at least show, you know, some sort of sustainability. And even though I'm more aggressive in the combines, I'm not aggressive at all when it gets to the funded stage because I want to keep them. I want to keep it for as long as possible, you know. And even if it doesn't go well, you get yourself into a drawdown. Well, at least you gave it a good go. You know, at least it didn't blow up in like 2 weeks and you held on for, you know, I think the median average for holding onto an account is like 2 to 3 months. So anytime you survive longer than that in a funded account, you're doing better. You're doing better than most, you know. You survive for much longer than that, well, kudos to you. Welcome to the dark side. All right, guys, let's finish it up. So I'm just going to let this run. If I notice something that starts screeching around midday, which is the London fix, so what is the London fix? It's basically when the institutions have to fix the prices of silver and other products as well, but they have to use some sort of a reference price for that. So they use this concept of the London fix on silver. It's different times on gold. It's 10:30 a.m. London and 4 p.m. on gold. So very, very different times depending on the metal that you trade. So go and kind of research the price fixing in metals. It would maybe serve you well. But at the same time, around about midday, there is a very high chance of sharp reversals. Usually when we're still contained in the Asia range. We don't have that now. So I'm actually expecting maybe a little bit of a wobble before it continues higher. But it all depends where we are in an hour. If we're up at ADR high, do you know what? That's going to be enough for me. And then I'm just going to leave it alone until much later in the day. So maybe post-NY cut into the euro close, maybe even day range fill. You know, what is day range fill? Well, it's the time of day when we're nearing settlement on the product and the take profit moves start happening. But you ideally have to have a level. It's not just the time. Time of day is a level. There's an assumption of what should happen. But then it's your job, it's my job, to look for the evidence of the day range fill happening. Basically, institutions, market makers taking profits for the day into the settlement. So it's a settlement fade. Sometimes it's a small move. Usually you can get at least 1 hour out of it. Sometimes a bit more if the time is right. But if you have a big uptrend that leaves multiple single prints, and it is with the main trend, just be careful with the settlement fades, day range fills, because it's low probability that suddenly you're going to have this huge reversal that eliminates the entire day's move. That's not the case. So really you would be looking for like a more moderate auction. But if it's a crazy one-sided auction, just leave it. If you were in a trade before then, don't try and fade that. So don't do that. Anyways, I'm going to finish it up here. So we will not be on air tomorrow. So for those of you who celebrate, we don't in the UK, but I know that we have a lot of our US viewers here. So happy Turkey Day. I hope you have a lot of fun with your family. We will see you on Monday for the Euro trade, as usual. Until then, try not to trade too much during the holiday time, because the time is to spend. That time is to spend with your family, with your loved ones, and to be present. So put your phones away, put your laptops away, put your laptops away, and don't stare at the charts, because even if there are good moves, there are more important times. So, cherish the times with your loved ones. That's not forever. We never get back the time spent with them or without them. And just be sensible. That's all I have for you today. This was the Euro Trade, and I'm Marcus Talker D. Have a great Thanksgiving, and we will see you soon. Take care.